And recording in progress. I don't have to do a free one now.
Ah, there you go.
How you guys
Yeah.
doing?
I'm doing good. I'm doing good.
Good deal. I mean, summer's hard to believe, but summer's actually kind of coming to an end, isn't it? So,
Bring Titan to Earth's distance from the sun and see if it becomes habitable.
yeah, we're the third planet from the sun, and
Sorry about that.
it's
Some
still
some
had
YouTube thing just turned on.
I was wondering how you were doing that. I was like, wow,
yeah,
ventriloquist.
it's kind of interesting to give me a scientific response to summer. Well, you're the third planet from the sun, and this time of year, I was starting to listen. And maybe it's misleading for me because my daughter's down in Oklahoma, but it's 109, 112. So
Mhm.
what I just said probably sounds foolish to you in the lower 48, but man, we were in the 30s yesterday, and we had a little spell where we hit in the 70s for a few days here a couple weeks ago or a week ago, and then back to the 30s again. I'm like, really? And I waited all year long to hit that 70s.
Yeah, we're not wearing a sweatshirt, put it that way.
Yeah, yeah. I just
Not like you.
went, walked a couple miles, and I'll be darned if I didn't have to start with my sweatshirt.
Mm.
Yeah, the
Yeah.
forecast here for the next week is only 100, not
Uh,
109, not 106.
Oh,
So I'm
okay.
like, yes.
see, so your summer's coming to an end too. It's starting to cool
Yeah.
down. Yeah, so I guess I take back the fact that summer's about ending. Now that I think about it, it's kind of foolish when I understand my audience. All
Uh,
right. Well, let's talk about where we are. It's been a couple sessions since we met. I like to definitely start off with, kind of just market as a whole, how people are doing with prop firm challenges, changes, and then of course on just a different note with the Anna that I put out, if there's any Q&A on that, because I've got the bugs worked out, I believe, for the most part, and I'm running on PAs now and no longer sim. Um, with a caveat of two changes that I've got to make. One is um, well, really just one, and I need to figure out because I run into some issues, and there's a big bug when I trade over midnight. That, in other words, that shift from one day to the next, and it works for me. So I've kind of like not made it a priority because 2 o'clock p.m. Alaska up till midnight is just ideal. I mean, it basically covers that whole Asia market and that first hour of London. And so everything optimizes for me really well, you know, just keeping the day separate. But I know like if when I go down to lower 48, because I'll be traveling a little bit in October, I won't be able to trade those same sessions until I fix that bug, because it's got to recognize as one instance, it starts on one day, it may go till 2 in the morning because, even Mountain Standard Time, ideally, what works for me would be that 4 p.m. to 2 in the morning. But I've got to kind of figure out what the issue is, and it's not so much an issue to run that session, but it's an issue to have another one set up to just kind of pick up after that one in a different session with different settings. So there's just kind of a bug there, and so that's the reason that's important for this audience is you're all in much different time zones than I am. So kind of understanding that, hey, you could run into some issues if you're optimizing from afternoon and crossing over that midnight in your time. Could give you some challenges where if you just optimize day to kind of test, which is the majority of our good runs anyway, then it's a non-issue. It's a moot point. So if you're interested in beta, there's no bugs or anything to prevent you from being able to optimize and hey, run an account or something just on day with gold. MNQ are the two that work really well. I'm messing around with little oil, but haven't got too much time invested in that one recently. But But gold is just totally surprised me when I was kicking that around. It's far more active and better than M and Q. And I was kind of thinking of you, Anthony, when I was coming across that because you spend all your time kind of in Globex in MNQ.
Yeah.
So I'm like, well, I don't know how much you spend in gold,
Mhm.
but all of a sudden here's a means for you to really kind of take on this other hobby that just kind of adds to your manual trading if interested. So that involves that,
Yeah.
impacts everybody. So that was kind of my big takeaway from the video I shared. I wanted to make sure you got that hey, this is gold now, and regardless, because now even with the Anna on MNQ, now I'm using that as a kind of a guide because my energy is on MES, but I got Anna running an MNQ and with a small size, so then I don't worry so much about entries, because getting in on a trade is like flipping a coin, you know. Reality is there's a 50% chance you're going to win on a 1-to-1, at any given time. That's how crazy the market is. And what we're training for and doing is not allowing psychology to negatively impact our decision making. But if we can manage that trade, there's an edge there. Just get in wherever, but managing the trade can give you an edge. You know, Getting in on a pullback, taking some profits off the table when you get some high volume, and a wick. I mean, just that alone is a strategy. And it's kind of interesting when you really look at a lot of strategies, you got without an edge, you got 50% of the chance you're going to win anyway. So I just kind of utilize that, and I'm actually doing better than I'm manually making entry decisions on ES, and I'm doing better than the bot, just allowing MNQ just to enter, and then when it enters, like yesterday, it had a stop that was like 3 times the size of the R, and it almost hit the profit, and then it just started crawling back. Well, because we were kind of below VWAP and up above VWAP, I just let her keep going back up towards the stop. And then 2 different times I went ahead and just added, which was a DCA, hit a target there. It crawled back up. I added again. Next thing I know, I was extremely profitable on that trade. And I never did go back down and hit the original target from the bot. But it was low cortisol, zero stress involved, and I just kind of let it go. It was the right size. We were kind of range bound as it was, so it wasn't just a trend day. And of course, those are the decisions I made all prior to even adding to it and not even closing it out when I say, I kind of got a large stop here. It's kind of going against me, but I just played it out anyway. Um, And then, of course, I just do my manual ES. But any questions on that video? I think I was pretty thorough. I had one correction that I did, and I know Julie said she was confused on that, but I think throughout the video, kind of tied the stop buffer ticks specifically to that NR7 range with the risk reward. And that stop buffer ticks, it goes with both. And it doesn't matter if your break even's true or not, that is an additional buffer to optimize for your initial stop. So that I just realized that actually absolutely is part of it. I just kind of think I had a defaulted set to like 8 or somewhere in the middle and optimize with that, which is a good means to optimize. You don't need to set all those settings to fine tune, but once you find you got something that works, then you can just do some additional fine tuning just with that one there. So I just wanted to kind of throw that out there because that video actually I did listen to it. I think it was pretty thorough. It was repetitive. It should give you a clear breakdown of the 4 different ways you can kind of optimize. And then I just had that one correction I'd put in there. So that's a good baseline video. If you've not had a chance to listen to it yet, it's probably one of the better ones, as far as if you know nothing about how to optimize a bot. I think it kind of walks through things pretty well. So now I will pause and let you ask those questions because I keep asking for questions.
Go ahead, Anthony.
Okay, so actually I rewatched the video again today. Um so yeah, I agree. I thought it was very well explained. And certainly, adjusting numbers, it's definitely a key to write these things down. So then when you optimize and you see the results, and then you can kind of fine tune. I think it's just a matter of what parameters you're fine tuning. Now, I did see, so on mine, so on the data series and the value, I didn't have a drop down to where I could change that. Um, Trying to think which one it was, but I wrote that down specifically because in the data series section for value, I think you had three different numbers, but I wasn't able to do three. I was only able to do one number. So I don't know if I'm missing something on that.
Yeah. Can you see my screen here?
Yes. Mhm.
Okay. Data series. This is what you're talking about right here. See how
Yeah.
there's
So the
something there?
value, yeah.
Okay. Um, in the video, I just did it real quickly, but I take for granted if you don't know, you've got to scroll down here to where um, you got to be an optimize for one.
Okay. Yeah.
So we got to be an optimize. Then once you're in optimize, here's your data series. So you got this
Mhm.
value 8 here. Well,
Yeah.
I wish it was like right there, but you actually got to come down here to where it says um, optimize data series.
Ah, okay.
And then you put that check mark in, then you
Uh-huh.
can roll up, and now you can do that a lot of times 2 to 23 and however many iterations you
Uh-huh.
want.
Okay. Okay.
Um,
Yeah, because like I said, I didn't see that and I was like, well, how's he getting three numbers? And I've only got the one. I said,
yeah,
well,
great question, Anthony. Great question because that
uh,
is
yeah.
it's a little frustrating that you got to scroll clear down to put that little check mark in and then go back up there. And
Yeah,
then
like you said, you'd think it would be right below it, for a drop down box to be able to do that.
yeah,
So yeah, I specifically wrote that down because I looked a couple of times. I was like, I'm just not getting that. I said,
yeah,
let me write this down. So,
yeah, great question. And then you notice this in back test, it's not there, but again, you
uh-huh.
don't change any of your
Yeah.
settings. You have to manually change the setting just to one other setting, in the back test. But that's I know you got that. But
So
yeah, that's a
let
big
me,
deal. Why we're on this particular topic,
okay.
uh, this is probably like my go-to range. It has been, I just kind of want to hit a small time frame up to, I don't want anything larger than 20, 23, 25 anyway. But I'll be honest
Mhm.
with you, I actually prefer, that 3 to 7, 3 to maximum 9.
Mhm.
And so as a battle rhythm workflow for me, as I'm starting a new week, well, last week I pretty much had all my optimizations done. So all I got to do this week as a workflow is I'll go in and I'll just shift my dates one week. Um, and then basically just start with the saved back test or the saved optimization, and I'll validate it, and then I'll just kind of run it again and see if there's any refinement. And so the workflow is just refining basically the last 3 months and kind of let that be the model. Hey, do we want to just leave it alone? When we get something set and say, hey, every 30 days, 60 days, 90 days, make any tweaks. That's definitely just as valid as me saying, hey, I'm going to just make some tweaks weekly.
Mhm.
I don't have any data that says, hey, other than it's an opportunity to kind of go in and maybe look at one of those other four, hey, have I really optimized as good as I can? So, because when you're trying to optimize from scratch, there's a lot of steps to go through, but if you just need to make a couple tweaks, then you definitely can. Because I've got one day with gold where that runner true is just so much better and different than just a fixed take profit with a fixed stop loss on the other days. And I just found one earlier on MNQ, the same thing, where the runner, is like 3 times the profit with a very acceptable small drawdown as a runner. So there are some days during the week where that historical data says, hey, you really do kind of have more trend days here, and so it's worth taking a look at. It's definitely worth taking a look at. But I don't know if me making this weekly shift to the right and just focusing on the last 90 days it is, but I want a model that I can duplicate, across accounts and kind of just make it a checklist item. Hey, here's what I do as a maintenance workflow. Versus, hey, at one time trying to go, hey, what does it look like from January to current? What does it look like from February? Because I downloaded all that historical data. Well, that final test that we do, and again, this is kind of a theory that I have, but this is not a theory, this is essential. In your back tests, once you think you've got something you like, you need to switch this historical fill process. This is going to give you a lot closer to live type fill, and it's a secondary data series that's actually being back tested. This secondary, very refined data tick kind of gives you a lot more accurate fills as if it was live because live data comes in via ticks. And so that's the reason of that. And with and now this particular version, I am very impressed with. I'm actually seeing better numbers in many cases with this test than I actually do in the default standard fastest. Which is I think a very good thing because this right here, Ninja Trader's optimizer is biased. It already does read what's happening on that next candle and optimizes accordingly, where live data, it does not. So crazy wicks here and there can really change results over time, let alone slippage and things like that. So
Now, as I'm tweaking numbers, is there an area where you'd say that makes a bigger impact versus other areas? In other words, is it your entries and exits, or is it your optimizing parameters? So just out of curiosity, if I'm starting to play with the numbers, where have you noticed impact?
yeah, that's another good question. Let's go into kind of a template. Like I've got this initiate day. Okay, so that just gives me kind of a baseline. Well, I'm going to change all the times, this and that. It's like, hey, from a day session, here's kind of a template. So I'll load that up to start and then kind of top down. Hey, by default, I'm kind of looking at that direction both. Default, I'm actually utilizing 2 contracts now. I did not talk about this use crossed instance, and that's kind of the second thing I'm working out, but I had to put this in for market replay because there was to separate while I'm in market replay with market replay data, which is actually different than the historical data. So it was more of a testing. This is a testing setting. But I've kind of got to work through that because it does affect having Anna set up global, I go to bed and having it come up the next day. And like last night, I realized when I did check the cross instance, I made it true when I loaded the bot, which is what you're supposed to do initially. Uh, Tuesday day bots kind of took over the Monday Globex that was on there. So today what I'm doing for a test is I just made sure the instance was off on both. Or if I would have had the cross instance on the Globex, and then when I turn the instance on the day, I probably would have been okay. So I have to figure out what really created that confusion for me last night, and it has to do with this use cross instance. So right now, just ignore it. False, 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 false. That's the way I'm set up right now, and that should be your default. But your question specifically is kind of a top down. What do you want to focus on optimizing? So when I come in and I'll do my first one with the look back and fix ticks. Okay, and we stomped our foot pretty hard. When you're in pivot look back, you're going to be in fixed ticks. These two go together like jelly and beans, jelly beans. Okay, when you're in an NR7 range, then you're going to have risk reward. Okay, those go together like chocolate and ice cream. Just always go together. So NR7 range is always paired with risk reward. A caveat is this NR7 range and risk reward is going to be risk reward down here, along with the stop buffer ticks. Okay, so that is just so important to understand, and I would write that down as a little checklist, because NR7 range with risk reward and optimizing parameters, risk reward. What we're doing here, Anthony and Kevin, is I want a no kidding optimized to a 1.2, 1.5, 2.6 risk to reward. So every trade is going to have a stop that is, the reward is less than that, I'm sorry, the risk is less than that reward. Okay, and that's a model, you know, and there's nothing wrong with that. And in some cases, it's better than this pivot look back. Okay, so that's the main difference on that. The reason I kind of default to the pivot look back and fix ticks is majority of my best optimizations do come from this setting, and the logic is this strategy, like this NR7 look back here. Again, this is optimized regardless of what strategy you're running. But what you're doing is it's 4 to 8. So I'm optimizing because, hey, from the 4 preceding candles up to 8, it's a look back function. And it's looking back and it's measuring the range of the last 4 to 8 candles, the higher limit and the lower limit. And then the strategy is actually taking when a 4 to 7 candle, when a smaller candle populates and it's smaller than the preceding 4, 5, 6, 7, or 8, depending on what you're optimizing, that becomes a trigger candle. It's building pressure. There's compression. You've got now smaller candles. They're inside candles. They're building pressure. Well, the strategy is designed to play the breakout of that range. So the range itself is based on, hey, I'm just looking back X number of candles, identifying a range, and it's going to take a breakout off the smaller candle inside that range as it kind of then pops out. And we're going to go up or we're going to go down. Well, the pivot look back stop mode, it actually utilizes that pivot point. So if it breaks to the downside, well, then your stop is going to be X number of candles. And this stop loss look back, you know, we're optimizing, you know, like 1 to 10, but it's going to look back 10 candles and determine the range. Now, could it be the same as your NR7? It could, but as you optimize, you're going to find out sometimes it's a little bit different. But it's basically looking back an optimizable number of candles and then So it becomes a valid pivot point, essentially. And that becomes your initial stop. So, so again, to answer your question, when we're in the pivot look back for a stop mode with a target mode of fixed ticks, well, we definitely want to be optimizing NR7 look back because that's the backbone. That's the strategy. So that's a given. But then with the pivot look back and fixed ticks, you're going to go ahead and optimize this stop loss look back and your profit targets. And so you can see my initialized day by default. Hey, I've got me a nice little range of 1 to 10, but I'm only just doing, every third candle, just a hasty look. I don't want to sit here and spend an hour to optimize all 10 candles versus all these different stop losses. So I kind of break it up into chunks just to give me a hasty look. We'll refine this as we find something that works. But your priority at this point when selecting pivot look back and fixed ticks is, hey, I want to do my NR7. I want to do my stop mode or my stop loss look back to get my stop figured out and what my TP is going to be. Then, of course, my time frame. So I want a candle size, a take profit, and my stop loss with the actual strategy of a NR7. That's it. That is your primary focus when you start optimizing. The refinement is going to be, hey, I want to narrow down the range of the data series because now I don't want to have it every 2 or 3 candles. I don't want to have every 20 ticks, and I don't want to have, just every 3 bars for stop loss. So once I get something that kind of works, then I go into where my increment's going to be 1, but this might be like maybe 4 to 7, 4 to 6. What was the range of my top results? And then with my ticks, I'm ultimately getting to where, my profit target in ticks, I'm ultimately getting to where this is just 1. And it might be between, maybe 150 and 170 once I get there. So then I've got a per tick, with even a per bar on the stop loss, and I'm refining that stop loss with kind of a locked in narrow range, and my take profit. So again, to answer your question, that NR7, and then your stop mode and your profit mode. That's your, and with the candle size. That's going to get you off and running. If we go NR7 range, with the risk reward, now we're still going to do this NR7, but my stop buffer, I'm just going to kind of stop buffer ticks. I'm going to kind of just lock that in. That is a refinement that needs to be optimized with either any strategy you use, but you can do that one after because it's just a 1 to a few ticks in addition to your actual stop that you've optimized. So it's really a refinement to your optimization, but not necessary in that broad sweep that you're trying to get some settings that actually work. So that becomes a refinement. Just know that, hey, to make things even better, come back and do that one. But to answer your question, where do you want to put your energy? When we're in the NR7 range with risk reward, all my energy is going to go into the risk reward because this is my stop and my TP. It's a ratio. So under the NR7 range risk reward, I will optimize this one here again, just a 1 to 10 to 3, but my look back is not even part of this equation. So I want to make sure that is set to where it's not going to even be looked at, because if you do have, 1 to 10 increment 1 here, even though it's not part of the strategy, it's going to be a combination that's going to be ran if you have it set that way. even though it's not part of the strategy at all. So to save time and resources, understand your stop loss look back is null and void when you are in our 7 range and risk reward. And that's very, very important. But that's kind of, again, to answer your question, that kind of, where do you want to focus? Well, it starts here
Yep.
with the stop and target mode. Then you're going to come down and focus on NR7 and your stop and your take profit. If it's NR7 range and risk reward, then here's where you might start around 1-to-1 risk reward on up to 3. And initially I might do like 0.4 or 0.2. With the stop buffer ticks, I have no look back that I'm concerned, and in my profit target and ticks is null and void. So I want to make sure that that's not going to add to my math, because profit target and ticks, when we are in our 7 range risk reward, again, it's in that ratio here. And then I'll always start initially with false. And I really am getting into a habit now, forget this larger one and like go like 3 to about 9. And then I can just do 1 and I hit run, and getting 840, that's quick. It doesn't take long, so I can just come in and do some initial hasty analysis on the look back or the NR7 range, and then even roll into, a break even then ride scenario. So I can quickly eliminate. So here's NR7 range risk reward, both on MNQ. Friday. Okay, and we just did the 3 to 9. So we got a kind of a 7-minute. We can come up here to the left. Hey, of our top 10 results. So that's another reason why I like to just go. I like to default to 1,000, even though we only got 840. But you will sometimes miss some better results if you don't have a larger one, because this performance top left here is really what's filtering out all those results. So even though max profit factor is kind of the performance factor that is sorting by, where I use that CalMAR and even that expectancy, there are some reasons where I may not want necessarily the max profit factor. I want something that also kind of filters out my max drawdown.
Yeah.
And I think in that video, I kind of showed where I put the CalMAR in, and it kind of filtered some of that noise. It's like I took a less net profit, but my drawdown was better. And that CalMAR just immediately ranked it higher based on that. That expectancy optimize on is really cool for even this particular setup, because it's like, hey, for the most part, if it's not at least 50% profitable, I don't even really want to look at it.
Yeah.
Okay, so now we did a oh yeah, all we did was add 1,000 results instead of 10. So I'll come up here quickly, just kind of sort this total net profit and 40 there. So right here, here's our top down on net profit. I'm immediately kind of looking to the left. Hey, from a performance hasty look, hey, these should all also be at the top. What I don't like is my drawdown is pretty high. It's over that, it's around that 25%, which is not terrible. But that's not, there's a lot better drawdowns and stuff that are out there. So my mouth doesn't water right away when I see this, but again, this is not bad. It's just like 2 micros. I think that's what we got set here. So 2 micros. Well, over the last 90 days, it's like, well, unfortunately, we'd have to go and do a little bit more analysis, because that may not have been within one session to where, hey, you've got a daily loss limit triggered. It's most likely not. That is a compile. That's an addition of a few different days. But again, what are you comfortable with? When this is in a 150K legacy account, hey, now this is starting to look really good. Makes my mouth water. I can enjoy. I don't stress about, some of that drawdown. It's in there. But that's why I want to go ahead and look at some of these others. Let's go back to our pivot and just kind of remember that 48 versus 12. Because then we can just easily switch back over. We'll lock our risk reward up because it's no longer part of the strategy here. We can even not worry about our ticks right now, but our look back is absolutely important here. And our profit target in ticks. So just a broad step, only 100 to 220. That's only like 5 different combinations just for the profit. I've only got really 5 combinations with the stop loss. And I'll still keep my 3 to 9. And then I run on that. So I didn't make that many changes. And I'm able just to kind of compare, hey, NR7 range versus the pivot look back. Which one gives me some better risk mitigation parameters? While sustaining and giving me some good potential net profit. Is this answering your question, Anthony?
Yes, it's very helpful. Very
Okay,
helpful.
yeah,
Thank you.
because that's really
Yeah.
once that light bulb goes off, when you're optimizing any strategy, when you kind of see, hey, which ones do I really need to run together?
Yeah.
Versus, in other words, because when you can kind of separate them and group them a little bit different, then it becomes you're just going to create a lot of efficiencies.
Yeah, I was going to say, I notice once you're comfortable and then you know what's important, by your click at the top, than what I have to look at the bottom. Um, to me, it just seems like, wow, it's going to take no time at all to process, look at the results, and then you know right where to tweak
Yep.
and to where something you're happy with. I agree on the drawdown because when I was playing around with some of the numbers earlier, I looked at the drawdown and I said, well, it's going to depend on what account you have. If it's a 50K or 100K, makes a big difference. And then same thing with daily loss limit. You don't want to find that you're hitting the daily loss limit and then you miss the profitability part. So yeah, no, that helps a lot.
Yeah, that's exactly right. So, and it's tough emotionally, it's like, hey, I'm kind of back to letting the different sessions kind of stand on their own, where I really wanted to say, hey, if I could do like Monday through Friday, a day session. It's just the sessions are so different. And yeah, you can come up with some great data, but then you're looking at, hey, I've got all my sessions accounted for, and this total net profit might be, instead of 5, it might be 15, and your drawdown might be 1,800. And that actually would be a very, very good end state. But if you kind of do some analysis and say, if I can continually get like 5 with a drawdown of 600, but now I'm able to kind of multiply that by 5. Well, see, then I'm looking around, hey, potential of 25,000 net profit. And again, drawdown might only be like maybe 1,000, because again, it's what's fascinating about utilizing AI to even combine this data together more is I'll take multiple sessions and kind of put them into AI, say, okay, now give me what is the max drawdown, as I'm running consecutive concessions together, because we can't see the different settings Monday, Tuesday,
Mhm.
Wednesday, Thursday, Friday. We're only seeing Friday, during the last 3 months. Okay, but if I've got a max drawdown on a Friday, well, this might actually only be 400 as the worst Friday in the last 3 months. But what about that Wednesday and Thursday before? If they were each 400, Well, now you're at your $1,200 drawdown. And
Yeah.
with a 50K, you don't really want to optimize for a $1,200 drawdown. But the only way to get a feel for that is I will take full week optimizations, kind of drop them into AI and the prompt, and that's where some of those reports that you see me share, where the maximum drawdown is really small with very large net profits, because I am finding over and over. Matter of fact, every report so far on the project is there's a hedging benefit that comes from running concurrent sessions and kind of optimizing via the different sessions. And what I mean by that is we got 666 drawdown here just on Fridays. Well, when Friday is a losing day, say like that 400, well, over the same 90 days, Friday usually is just maybe giving back some gains from the night session, or Thursday was or the following Monday is another winner. So then that drawdown from Friday's gone. So that it's there's a hedging there that's invisible when you're optimizing a single day. And the only way to really know from all 5 days and potentially the 23 hours is you've got to then export that data and try to look at it through a different lens. And that's so, but here we are, the pivot look back with fixed, and now we're up around 5,300, but see that drawdown's half of what that NR7 range was giving us. Plus with a percent profitable of 78%. So this actually looks a lot better, does it not? Than what we had. So just running those two hasty optimizations, and we identified what you want to focus on within each one. Well, just in our really slow, the last 15 minutes, because we've been talking so much, but we did it relatively fast. But this kind of shows a Friday, hey, here's absolutely something that I would feel comfortable running. And another thing too, this was MNQ, and my default time is generally 5:30. Gold is at 4:20 because that's really when the pit opens Eastern Standard Time. But this kind of jumps out at me as like, hey, that's not my normal model. I forgot to actually change my start time, but I don't think I have this good of numbers on my normal Friday. 5319 600. Let's just kind of load MNQ Friday if I've got that optimized. I may not. No, I don't. I don't have MNQ. So here's like MNQ Monday. So what we just did right here is we just kind of flushed out something I'm going to refine this week for Friday. I love these numbers here. This hasty look here, this is something that I definitely would be interested in pursuing further.
Mm-hmm.
That's very good drawdown with a very good. So again, it's just Fridays, but we come down here and start, what does this other data mean? And as you optimize, spend a little bit more time in the automation things, you're going to start looking at this summary a lot more. And again, largest loser, 588. That's a little bit bigger than what we like. But again, that's 2 micros in it, MNQ. And we probably have to go in and look at that. And you can. Let's look at that 588. So we go into trades. And let's kind of drill down. Here's 588 stop loss back on June 12th. Let's find out how could, theory is again, this one here only had 4 candles, but there was probably a very large trigger candle. And so a very large stop, and then the trade ended up going against us. And that is an issue when we do have, again, 7 candles, and we're down here at a 6-minute candle. Well, let's just look at it. Glad we don't have a lot of those, but let's go back to June 12th. So then we can go right in here to a chart. And let's look at June 12th. Okay. We need something that's kind of showing us up. And it could have been a combination of these two losers, but just do some hasty math. If we're at 86, 786 to 64, that's only 60. That's not it. And this ain't it. Well, it was Friday. It was on the 12th. Okay, June 12th. And it ends here. So it definitely was in here. So yeah, I think when we do the math, we're going to find out you got a small win here. You got a little short here, small win, but you got the full loss here. We're going from, we hit a stop loss at 29,640, but entered long at 786. So yeah, so that's 120 points. And again, 530. So that's just went against us immediately. So there's 120 points. And then over here, we flattened long at the end of the session. We entered long at 3,037.25 and at 977. So this is just a small loss of around what, 23 plus 37, so like 60 points. So you got to look at basically 180 points. Yeah, that kind of explains that with 180 points at 2 micros. Is that like $4 a point? So there's 720, which makes perfect sense because we did have a small winner here and a very small winner here, but we lost 720 on these two trades. And that explains the 588. So important to go in and kind of validate, hey, what's really going on some of these outliers? So we're just identified here at, hey, opening range was the biggest one. And then it just kind of ground sideways and the market closed in a little drawdown. That flat long, that wasn't a big loss, but that opening range sure was. But so here's like another 514. But what you look at, what we've got to see is, because we sort by profit, so we get an idea here, hey, our larger losers, but we sure do have a lot of winners. Again, that 136.20, that's really based on this 140 ticks that we're optimized to right there. But you got 78% profitable. So average trade, you take all trades, total trades 89, average trade is $59. Okay, that's your expectancy. Well, within that expectancy, your average winner's 134, average loser's 215. So this ratio, average win to average loss, that is something I really don't like. I'd like to see that greater than 1. But it's not a showstopper when you do have this percent profitable, so that's where you just kind of got to analyze and say, hey, what am I comfortable with? Hey, my max drawdown is really my overall kind of framework that I want to see. But this large loss, this average losing trade, are they, less than 25% of the time? And then the other 78% of the time, hey, I'm getting at least $59. So it's just math. But consecutive winners, 14. Consecutive losers, 3. That's great data. Busyness. You know, how many Fridays come in and it just doesn't even trigger a single trade? I like this number of trades, 89, and the fact that, hey, I'm getting on average, I'm getting 1 to 2 trades, you know, at least a session. Um, and then this profit per month. You know, if we can come up with similar results, you know, 5 days out of the week, well, you can actually kind of take this and multiply it by 5, and that gives you something, a milestone. You know, why am I doing this? What is, you know, it's hard to just optimize a Friday, but you got to realize this is just one of 5 days. And if you can come up with anything closer to this, and this data does reproduce in the next 90 days, well, just on Fridays alone, you generated an extra, you know, $1,900 just on Fridays. Um, so that's why we're doing what we're doing, essentially. You know, is there a way to, one, can it aid in manual trading? And that's actually tertiary because that's not even the primary reason. But number one would be, hey, is there some automation that I could do to augment my trading business? You know, and can I actually have it separate from my manual trading so that they don't conflict? And then you have an additional means to generate some additional income. That's really number one. Number two is, hey, can it aid in some of my manual trading decisions? And I'm starting to kind of work into that one there, particularly with gold. I just kind of let it go. I want Anna to just run. I'm not closing things out. I'm documenting when I go in and close it out, like FOMC or something like that. I will document it. But right now my test with gold is, hey, if I was to never manipulate the trade when it's in there, how does it do standing on its own merit? But MNQ, I'm like, no, I'm going to aid in my trading there. Can I discover an edge by kind of allowing some automation to get in some entries based on this kind of narrow range breakout? And then can I manage the trade and be profitable over time? And then three, tertiary, hey, it stands on its own as a additional stream of income. That's really the three different reasons why. And let's take it a step further back to one, standing on its own, can it generate additional income? And this is where I kind of think of Michelle, I think of Brian, I think of a lot of folks that are still very busy when the market's actually open. And then they got other things they're doing at night and Globex family, this or that. You know, what if you get some augmentation kind of up and going, and then it starts paying for some other funded accounts evaluations, though, so you can still refine that skill of manually trading. So it can stand on its own as an income stream, you know, for everybody interested. But you've got to be interested in technology. You got to enjoy spending some time on the computer, at least initially. Once you get some things up and going, then sometimes I'm like, I want to go optimize, but I'm like, I really don't have anything to optimize. I'm kind of done. And now it's just a matter of tweaking and refining in my daily workflow. But the one thing we've not really talked about much is, I think you got to consider an additional cost, like with a VPS. Now, if you're home at all the time, if you've got a high-end computer, I think we talked about this last time, Kevin. You know, hey, if you've already got that high-end computer, well, then you really don't have to, as long as you got good internet connection. Me, I'm in Alaska with Starlink. I have internet connection issues. Um, so I could go spend 3,000 on a trading computer, but it's still going to be limited to my internet service provider and connection there. So to me, I was tired of using my little yard tractor to farm 100 acres. So the VPS becomes an additional expense, but I didn't get it solely for automation. Now I'm realizing, wait a minute here, I've actually got, I've kind of got a direct server, so I've kind of got a high end VPS, but now I've got 16 processors. I've got all the memory, so I've got me the premier trading computer as a VPS. So it's like, hey, do I want to pay monthly for that, or do I want to pay 3,000 every couple years to keep my computer updated? So I'm like, you know what? I am just going to basically lease this tractor for the size of farm that I'm trying to produce some crops on. And by the way, it makes this automation that much better. You need those additional resources on a high-end computer. Plus, from a internet connection perspective, or if I need to close my laptop, go to work, step out, go to town, it doesn't matter if my computer's on or off. Everything is 24/7 on that VPS running. So that is, if you're really interested in automation, that is probably something you really got to consider. It's not just getting a VPS just to run some automation. It's like, hey, do you have the right computer even for manual trading? This VPS is located in the upper Midwest, not too far from the Chicago, CME, so the latency is far better than I get here from Starlink. So I just see a lot of improvements on that end. But I'll just kind of throw that out there. That is probably one of those nuances that, if not really addressed early, and where that really jumps out at me is I know, Svetlana, if you're listening to this, I know that's an issue you've had with the push button trading and connectivity issues. VPSs do not address all connectivity issues, because I got a diagnostic tool from VPS support. It's had everything closed the other night on the 23rd. So I sent them my logs. Everything appeared that it was a VPS connection issue. So they sent me a diagnostic tool, and I sent my additional logs and some trace files. And basically, it was the Tradeovate connection, CQG, that had a timeout, which then Ninja's kind of built in to kind of preserve accounts, and it did disable all the strategies, and everything was just sitting there when I thought I was in a trade, but but those are things a VPS would not address that issue. When you've got like a really long timeout on the CQG connectivity, because it was a Bluesky accounts and Apex accounts all at the same kind of dropped. And so when I sent them my trace files, logs, and the results from their diagnostic tool, they're able to drill down to that layer, well, even above the connectivity that they provide. So I just share that, not to say you have to worry about getting that technical, but you're going to have some connectivity issues regardless of that same drop would happen on your own laptop, regardless. That was at a very high layer, where that disconnection happened. So that does happen. It happened on the 17th and then again on the 23rd of August. So 2 times this month when I'm not paying attention, everything just turns off. And things turning off is a lot better than things turning on randomly, for sure. All right. Where are we at? Where are we at here?
No, you explained my question really well, so you went into great detail.
That's awesome. Because I really, I'm excited, with it, the results that I'm getting now that I've kind of got these bugs worked out. I'm very optimistic, very, very optimistic. And Julie's been doing some beta testing and kind of working with her a little bit. And it was very neat because with this version of NR7, or this ANA, I'm sorry, the video that I did over the weekend, she watched that. And then she realized that she was not optimizing correctly. And this is one of the first times that, hey, when we do have settings that are very close, literally, we are now getting the same results, which is pretty cool. In other words, take the next phase for me is, hey, I need to make sure this can be duplicated, different time zones, different computers, because when I optimize or import the same settings on my local computer, I do get byte for byte the same results that I get on the VPS. So that tells me that, hey, there should be a way to, when you've got the logic, the code on some automation, there should be some consistency, from one user to the next. Now, obviously, when the settings are different, you're not going to have consistency. But that's kind of been a challenge. So there were some things in that video that kind of jumped out to where she's optimizing a little bit different, but now we're actually having very, very similar results. And we do have kind of like the same time frame and NR7 look back kind of selected. She can be away from her computer. She'll get a notification on her phone. She's like, oh, Go got in. And sure enough, mine entered the same time, essentially. And that's very positive, because if this can be duplicated, then that means it's the code, the logic, everything is very sound. And there's just a huge potential to even monetize something like this. That's one reason I don't just kind of drop it out in the forum to everybody, because there very well could be some opportunities that I will exploit in the future. But with a small group of those that are interested, you'll never have to pay a penny, especially if you're able to run some tests, optimize, and kind of add some value to it. Then you got a lifelong, free automated bot, so any testing that you do is very valuable to me, and you're definitely not wasting my time when you ask questions and want to look at things. And if something's not making sense, there's a lot of value added to, even directly for me, to kind of know what you're experiencing on your end.
Yeah.
For sure. So very coveted if you do decide to run some of these tests and run some sims, and then don't even have any cortisol go up, in your blood system, while you're running a sim. Just let it go.
Yeah. Once you do it, it's just set it and forget it, for the day, and that's kind of what I just started doing yesterday and today, is just set it and run it, and then at the end of the day, go back and review and see what happened, and then kind of tweak it from there. Once I launch it,
Yeah.
So like you said, hey, once you get this down, the time, like you're saying, hey, I can just adjust each week, and then I can look at it like that. Because one thing I've noticed is, so we've got to look at, I don't know, last couple of days and the end of last week, I noticed a lot of wicks on the candles. So, it's a question, am I in a trend or is it a range? And so the question is, when you're manually trading, it's like, is this a time to be trading, or is it time just to watch and wait? When you set it for automation, it's going to, respond obviously to the parameters that you've set. So it does take the emotion out of it, but it's important to see that maybe that's not the time to launch, your bot, is to say, okay, I need to make a different bot for the conditions that's going on currently in the market. Because we do know also, hey, when numbers are being put out, that changes things, the expectations, the FOMC changes things. No different than we're in the summer. And summer trading is very different versus in the fall or the winter. So, those are things all to consider that a lot of times we're not looking at, is in the bigger time frame, is just seasonality of trading.
Absolutely. And this would be kind of a good note to, kind of transition to actual market and what we're looking at here, because the manual trading, again, that's the real joy of kind of what we're doing. And I'll just kind of take a couple minutes here to and definitely love your guys's feedback because we've focused from a manual trading perspective quite a bit. Hey, some of this volume profile, like in the VWAPs. And I am finding over and over. I just can't stress when I do what I preach, I trade so much better. And kind of case in point is yesterday. Let's see here. So here's yesterday. MES, NQ kind of follow the same thing. But US market kind of opens up near that high. And we've kind of got this key levels, again, previous day or through Globex, in other words, previous day was high. Globex just never did retest a new high and it kind of come back down. But when we start looking, here's this 530. This is New York session opening up. And you kind of got these large wicks here because again, this is 1 minute, but very bearish, when it's coming down, but we're coming from kind of a bullish perspective. Here's kind of our Globex high, but we open right away and we kind of go down. Well, and this causes you to have a very strong bearish bias. But when I am down outside this large volume area where 70% of the transactions have taken place, starting, this is from like around 9 p.m. or, midnight. Well, this green number here and this number here, these are just the value area low and value area high. They're populated, on the chart. You can visually just look at any profile and kind of see them. But what I want to get at is yesterday, I ended up kind of having that bearish bias and ended up kind of holding onto my bear moves. And, so there's a lot of drawdown when it's up in here. But we spent so much time below VWAP and now we're above VWAP. So I still kind of have and at this point here, we're just kind of bouncing off, kind of some upper bands. I had a very peace of mind to just kind of still give things room because this below VWAP clear, for the first 2 hours, then above VWAP, we come down and bounce off VWAP. We fail to make a high here, and we just come right back down through VWAP. So we're coming all the way back down to this lower value area. Yesterday, I held on to it too long. I had reasons I should have got out. When we come back above all this high volume, I should not have been short anymore and at least went long back up to VWAP. Because worst case scenario is we still make a higher low here, but I can go my edge. This is so valuable. The edge is still to don't expose yourself too much, but your edge is, hey, you're going to probably come back up into this high volume area. Then we really need to study, hey, at this volume weighted average price, what's it doing there? If we make it through this VWAP, your probability of coming to this higher value area now is substantially high. Once you hit this high value area, the probability is it's going to rotate back down unless you're in a trend. Well, how do you know, Jake, if you're in a trend, it's not going to come back down to VWAP? It's going to break up above one of these bands, and then these bands kind of become support. And of course, these bands are in a little bit different position at that time. At 7:30 yesterday, things looked a little bit different. But when this opening range, this upper limit starts becoming support, that's a big flag. When this value area high starts becoming support, that's a big flag. Hey, price is discovering, it's wanting to go work some other areas outside previous high volume, that's when you don't want to be short anymore. But 70% of the time, this value upper area and this lower value area, price is going to be in between those 70% of the time. We get a lot of clues that it's wanting to discover, it's wanting to go back up and maybe retest previous day's highs, when what was resistance here and resistance here, when this becomes support, price just continues to kind of go up this way. That's when you know you're on the wrong side. I never got that yesterday, so I was safe and I was profitable the other day. I just made it hard on myself because I should have taken profits down here, and then I could have easily reversed, taken profits up here, and then if I was still bearish, I should have went short again. I could have taken profits here. I ended up just waiting and taking all my profits here and essentially being done for the day. So today, what did I do? Again, here's around 5:30. I applied what I learned yesterday. So I actually did take some profits here. And I took profits off the table up here at the top, and then it was 76.80. Yeah, so clear up here. Wait a minute. Let me look at am I on the right day? Oh, here we go. Yeah, because today, so I was long. I waited till we got down to here, and I actually got in right before this wick. But it happened really quick, shot right back up. I stayed in. So I was long at this point here, but when I got these wicks above VWAP, I took some good profits off the table. Then we come back down, and I ended up going long again because I was at a low value area, and it was profits off the table again. But I rotated through accounts today. Yesterday, I had just a couple accounts, held on to them through the whole session, and didn't even trade half my accounts. Well, today, I'm like, wait a minute here. We're above VWAP. We're below VWAP. I wanted to see what price is going to be here. We never could break up away this value area high, which was printed on the chart. We never could get back up to there. But I had 76.80 as a target, and that's actually where I was essentially done trading today. Just a beautiful, utilizing the value area low allowed me to set a target. It was perfect here. On MNQ, this same box that I had up, I was going for no, it was on MES, 7692.75. And we come up and just literally see how that's the top of that box? I literally wicked in. So I took a perfect trade right there, 92.75. And then I just set my target down here at 67.80. So why can't we do today more days? And it's mental, it's psychological. But yesterday I held on to all those trades because I let my bearish bias kind of trump. And so I kept holding on to them, and it ranged and I was safe. But where I get in trouble, Anthony and Kevin, is I'm thinking we're going to range, but then we come off of here and we just explode up. And the next thing you know, we're going back up to previous day's high or whatever. And that would have been an issue yesterday. And I really wasn't protected. It just ended up not doing that. So I was safe. I come back down below VWAP. I added a couple to my size, and I was green. So today I'm like, no, if we're ranging, you got NVIDIA earnings coming out tomorrow. We've got some FOMC, I think, in Jackson Hole, Wyoming later this week. So there are some reasons where, hey, some things are priced in, like NVIDIA earnings is supposedly kind of priced in, but FOMC is kind of big. Everything's kind of bullish, but everything's going to be kind of rangy and going sideways until we get those earnings and FOMC in Jackson Hole. But again, it's just that I don't know if you can see this yellow. I don't like it taking over my screen, but the volume profiles.
Mhm.
Um,
Yeah.
Anybody listening, I just can't stress
Yeah.
if there's a fundamental law or something that you, regardless of your strategy, we've got to heavily weight those key levels to decide if we're going to be in the market or not, because we can absolutely be in a ranging market. Um, what's tough is if we've got, like, this is 8 o'clock, kind of my lunchtime. I kind of want to see, I want to know what this high and low is going to be from basically 12 to 1 Eastern Standard Time. Well, it's a nightmare to trade in here. This is the range you alluded to a minute ago, Anthony. Hey, maybe we shouldn't be trading. Maybe the bot shouldn't be in. Absolutely. This is the kind of area, and it's a decision point. What is the market going to do post lunchtime Eastern Standard Time? We had another return, and once we had this move down to the bottom of the box and the rejection at the box, that's where 7680 became my target. So that's kind of a nuance there. It wasn't just the fact we broke back down through VWAP, but I'm also looking at lunchtime. And if I break below this 1 o'clock Eastern Standard Time and this becomes resistance, well, how far down are we going to go? 7680 is a very psychological number. I knew better than to hold on to retest the day's low. I'm like, let me just settle for 7680. So I put it in. I had quite a few accounts, and I was just like, I hit almost to the tick here and then almost to the tick there. I'm like, what's going on? Why can't we do that more often? All I did was do what I've really shared with us in our manual discussions, probably the last 6 times in a row. And I'm like, key level here, a key level down here. I'm looking at this volume and then understanding, hey, if VWAP's right in the middle of that, more than likely we're going to be ranging a little bit. I am a lot more comfortable with shorting with this framework than what I was, 6 months ago. Once I'm perma bull and I'm locked into long, I did not do good shorting. Now understanding these key levels, a break below this lunch box, a clear break below this 15-minute opening range, and then the bottom part of that 15-minute opening range becomes resistance. I'm very comfortable with short. I'm a lot quicker to get out of a short with some signal candles on the bottom than I am to get out of a long, with maybe a wick or something. But and this doesn't matter if it's New York Session or Globex, because and I think that just becomes real important for the variety of trading styles that we have. But here's Globex here. But again, it's the key levels from the previous New York session. In other words, you got all this volume here. Well, look how that does play out in Globex. It's not until London Exchange opens, Asia markets kind of over. Well, now look at this is that upper band of VWAP. Remember how we were above VWAP here? And now this band is becoming support. What does that tell us? This key level here from the previous day is now becoming support. And what does price do? It does discover. It wants to go back up and retest some of these previous highs. When this price action occurs during the New York session, well, you're not in a range anymore. But it's really not until here, so midnight. Anthony, I think you're just about ready to go to bed. Or maybe that's when you start. But midnight Eastern Standard Time is where we finally this range, this chop. And then just the rest of the night, you're good to go. And then we got some news that comes in here around 8:30 Eastern Standard Time. But from a manual trading perspective, I can't stress the importance of respecting that 70% of volume that is recent. And when you break out of it, you know, we break out of this range here, then it can become very valuable. Start looking at like this range over here, because now you got like this previous key level. You know, you've got even this point of control that's kind of populated, and we just kind of now look to the right. Easily could have achieved some targets by targeting an upper level from a previous day's value area. See, like the 7,700, that's kind of a key psychological number. So 7,700, and again, time is doesn't matter. It could be New York session or Globex, but once we see price wanting to break out of this 70% volume area, it's becoming support. We're like, well, how far is it going to go? Well, there is a high probability there's a lot of transactions that took place up in this area. And we don't have a lot of volume here, so we really don't have a lot of resistance until we get back to the upper part of this area. And that's exactly what happens here. And you see that over and over. So that's a way to know, hey, the particular bot that I'm using or my own strategy that I'm employing, is it time for that? Do I want to put something in and kind of walk away? I want to give it room to move. Or do I need to play a little bit closer attention? I've been long and I'm kind of approaching that upper limit of a volume area. Maybe I really don't want to hold on to it without paying attention to it. Maybe it's a good place to take some profits off the table and wait until that becomes support. You might miss out on a good move, but there's a high probability, again, could be any time of the day, but maybe you miss on it here. But again, look at this move back down. And again, it's coming down to retest some of these highs from here, but then she takes off. And again, it's news. Well, that's 1217. That's London Exchange, and that's nighttime activity. But this is a cycle that just repeats 23/7. But allow those key levels to really, and then you assess, hey, do I really want to get in the habit of going long when I'm at the upper part of one of these volume areas? Do I really want to go long when price is over here? You definitely don't want to go short in a bearish market. We really got to be careful. But we have a decision and it stands on its own. Before I'm going to go long above this volume area, if I can see I'm not touching VWAP anymore, and my first VWAP deviation band is becoming support, I've got these higher lows. Now I'm like, good grief, this is my support area. Now I would be looking at longs. I'm not going to hold on to a trade expecting it to roll back down. Not when you see it bouncing off a band. Not when you see it holding up into a previous high value area. Price is just continually moving back up into this area. She breaks out right here. I mean, that's kind of an interesting candle right off of this level. Pop, consolidates, another big push. And now we have this is just a beautiful pullback. And then she takes off. But this right here is kind of a signal. Hey, we're above this support. This is a breakout pullback. And the bulls are in charge. That happens over and over. Here you fell to get a higher high. You're below this second deviation band. You have this strong breakdown through this upper band, big consolidation right here. Again, time of session. This is New York session getting ready to open. And there's just huge liquidation. And again, looking back at this high volume area we got over here, We have to even look further left, but this was beautiful actually, because this wick, another reason it did not stress me, it might be easier to see on TradingView. That's gold. Okay, so this wick right here, when we look at, it was fascinating to look at the regular trading hours today. So we had this gap for one. So filling the gap here is kind of where I started getting bullish. This didn't surprise me, but I was kind of bullish overall. I got in right before this wick, but I wasn't worried about it. Happened so fast. If we would have had to follow through in a meltdown, I would have taken a big loss. But it wouldn't have killed me, because the size was still good. That early in the session, maximum size I'm on, even on a large account, is 5 micros. After that first hour, I might go to a mini. But all we did is we worked down to kind of fill this gap, and we didn't even hit Globex low. So the fact that this wick come down, I'm like, this was liquidation. To me, that's how I assessed it. This was liquidation, not pointing in the direction that the mark wants to go. This was not bears taking over. This was liquidation. It just whipped down, filled all those previous orders from over here, and she basically struggled a little bit, but ground up, just continued to go up. So again, it goes back to stuff we talked about: gap, bearish gap and go, bearish retest gap. This was what you'd call a bullish. We opened up above the previous day. I mean, we really didn't clear. We cleared Globex, but previous day's high was clear up here. So it's not truly a gap in that sense, but there was a big gap from when the market closed yesterday from when the New York session opened. So there's a lot of imbalance in here. So this is very normal behavior. This wick is larger than I like, and it kind of almost bit me, but I had the right size and had room to move. Just come down, went right back up, and I was green again. I was like, that kind of sucked. That could have hurt, but it was it worked out. But yeah, so there's one of those wicks, Anthony, that you were just kind of alluding to.
You said
But
your trade went.
we got to realize there's nothing wrong with price. We expect it's either going to come down here quick, or maybe it's just going to grind for 2 hours, 3 hours, come down, fill these orders, create some balance, and then turn bullish. We don't know from one day to the next.
You said
we don't know.
Your trade entered in before that liquidation wick.
Are you talking, Kevin?
Yeah, can you hear me?
Barely. I don't know if that's my computer volume or you were very quiet.
I think he was asking if you entered in the trade before that wick dropped, which you did.
Yeah, I was long.
Yeah, you got in right there, and then it dropped. Yeah.
Yeah.
So where was your stop loss set in that trade?
Down here, Globex low.
Okay.
Yeah, and that's kind of another nuance. Again, that early in the session, I've got my bias going on, but why don't I see my pivot points here?
Well, that's the difference in sizing. When you size correctly, then you can drop your your stop loss in, your take profit to bigger range. And
that's exactly right. This first hour, I'm half size. And then it was after this wick came in. Once I got this confirmation that that was kind of the low of the day. But again, it's this kind of Globex high. Here we go. Here's the So I don't have previous Globex, but this is the pivot. This is a homemade indicator that I absolutely love. It's called pivot session levels. So right now, this green line is telling me what the previous day high was. And this green line will not change until session is over tomorrow. Here was previous day's low. So I'm always seeing that I can be zoomed in. I don't really have to look left to see where the previous day high was. The purple lines, these are live. These are changing as Globex, and only during the Globex session. The Globex low is this purple line. Globex low, Globex high is this upper purple line. So this morning, purple line was clear down here.
Okay, gotcha.
Okay, and now I've got a, you're going to think I'm crazy, but I've got a Globex open stats. So this is not an indicator, but I could go in, put in like 200 days, and it'll dump a bunch of data into a file. One of those outputs, I can look at MNQ, MES, and say, hey, when I open in the top 1/3 of the last 200 days, do we hit Globex high first before we hit Globex low? So that's another reason where I was looking more at this balance, and Globex was clear down here because we opened in the top third of where Globex was. I have no idea how far down we're going to come, but of 40, it was 75.3%. It's like 40 some days out of 36, we hit the Globex high before we hit the Globex low when you open in the top third. So there's just some data there that also goes into why I've got a very loose stop on this opening, because price coming down towards the Globex, absolutely normal. When that Globex gets hit and becomes resistance, now we have price going to continue bearish probably for quite a while. But this purple line was my biggest thing. That was well below this wick. So price could go all the way down to my purple line and not be invalid. Is kind of where I'm getting at. So it is a sizing issue, and it just, would I have wrote it clear down there? Probably not. If I would have broke out here and then price slowly come down, I would have probably cut my losses, on this first deviation band, because a lot of this, because then I would have assumed, I was like, okay, Globex low is clear down here. Well, I wouldn't stay in the trade if I was long all the way down to here. But this was just one of those wicks. Again, how many times I'm tired of getting in long. It's like, okay, we're down in this consolidation. I'm at the bottom part of all this volume. And that's kind of where that's where I was at. Things really kind of slowed down, lower part of this volume. I'm like, okay, I can't go short anymore because I'm below this large volume area. So that was my main reason for, okay, I'm done being short. But I give it plenty of room based on, hey, absolutely normal behavior to come down to where the previous day's market closed. What were some of these lows here? So if this would have broken out of this area here a little bit slower, I would have probably cut it. And then if we would have had a hammer, or a liquidation wick, then I would have been able to get in a little bit lower and then enjoy the ride back up through that opening range. But this was just one of those quick things. And how many times, set a stop like here or maybe at this low, and it's just, you get up to go to the bathroom, you come down, and within seconds, knocked out your stop, and so then, but if it continues, you got a nightmare. So again, your size, psychology, it's a nuance. That would just happen so quick that I was good. But if it would have just come down and then halfway up and then rolled down again, I would have taken a loss all the way clear down to Globex low.
Yeah. Okay, that's good context. Thank you.
Yeah.
Okay.
But that's room to move in that first hour. You got to give it room to move. And so your size is paramount, but you got to give it room to move, or you're gonna get paper cut to death. You're gonna bleed to death, or you wait. Don't trade that first hour if you don't have a plan to be able to absorb this, because this is right at 6:30. Which I wasn't really expecting because we did have news at 6, and there really wasn't much action from that housing. But this is like right at that 6 to 6:31 here. So we're approaching that 1 hour IBL. The gap that we were kind of looking at on TradingView. Hey, there's no gap, and things were definitely slowing down. So it looked like, hey, here's our nice move back through this volume. And again, I'm just in the habit of I'm not going short when I've got a key level from the volume area. If anything, that's where I'm going to go long. So, but that's the context there. What you thinking, Anthony?
No, it's good. I'm looking forward to spending time optimizing, trying to get the numbers better, and then deploying it, and seeing the results.
Yeah, that's a lot. Last week was very encouraging. 2 micros on the one account that I'm kind of tracking. That's like, hey, this is my beta test account. I'm trading multiple accounts with
Yeah.
Anna, but it was 2 micros. It was up 3,500 last week.
Okay.
So I'm like, and the drawdown was like 741. So that would have passed an evaluation on a 50K.
Yeah.
Starting another week, and that was actually better than what data suggested it should have been. So I have to be prepared. It's like, hey, not every week's going to be like that,
Yeah.
but just kind of letting it go. Sunday night sucked. It was a pretty big drawdown, but the Monday day um, ended up being down like $95 because it was actually a winning day. So like a $500, no, $800 down. No, that was on a larger account. So I was around 500 down on my 2 micro account, but ended up being just like $95 down by the end of the day. Well, then in Globex last night, I'm up 458 when I wake up this morning. But then it took a big loss early, and so it took all day just to get some of that red back.
Yeah.
So up 458 from Globex, but then down like 200, for the day. So net profit for the week is like right around 233, 2 micros. But again, that's just letting it run. Globex, I didn't manually trade that. So really, even though there was a little more cortisol, because when you come off a
Yeah.
really good week, you're
Yeah.
expecting,
You're
you're
doing the
hoping.
math, you're
So
multiplying. Yeah.
yeah, you're disappointed when you don't
Yeah.
see it. But last
Uh,
week, Globex Sunday wasn't that great, and Monday was like $58. It was Tuesday, Wednesday, Thursday where each
uh,
day did really well.
mhm.
So then as I kind of have my workflow, I kind of look at it, I was like, well, actually, Tuesday Globex is actually got some really good settings, and then the Wednesday day is a runner day. But they did really good last week. But Tuesday, Wednesday, Thursday was essentially 90% of all the profit came in. Friday was a break even, and Monday was a break even. So we'll kind of see what happened here. But we've got um, bots going here already. So I had MNQ here. Okay, realized. So this is today, just since we've been talking. I've made
Okay.
163 on MNQ,
Uh-huh.
but I've lost 310. And I say 310 because that's a two micro. So I've lost 310 on gold, and I'm in a trade right now. So MNQ is beating gold right now. And that makes sense because MNQ triggered long right up in here, and she did not go. Gold did, and then MNQ. Actually, let me just go to here. And MNQ triggered short, literally right before we started our call.
Now, are you locking out your accounts to say that once you reach a stop loss for the day?
Um, no, not on these evaluation accounts.
Okay.
And that's a good question, Anthony, because I have kicked it around. It's like, but I need the data to kind of say, because
Yeah.
like gold, like last Friday or yesterday and today, it kind of took a loss fairly early in the session, and just by letting it go, three-quarters of the loss are back, just by letting it, just let the strategy go. And
Yeah.
kind of looking at it from the corner of my eyes, like, okay, I'm green on it. It's potential could hit a target, or it's gonna get flattened when the session closes. So I haven't got to the point where it's like, hey, over all the winning days, or maybe even over the losing days, hey, am I up 200 before I actually end up having a couple consecutive losses? And then that daily loss limit, which is gonna hit, even though I don't have a daily loss limit like configured within the bot. Um, that's some data that I got to add in there. Um,
Yeah, because some prop firms are doing, like on a 50K, it's 1,200 a day,
right.
automatic. And then, most of them now have made it to where you can manually go in and set your daily loss limit and lock yourself out.
I do that a lot on like on the PAs and manual trading. That way,
Yeah.
or when I'm getting ready to pass an evaluation, I don't want to have to sit there and micromanage. So before that session started, hey, I need $423. Well, I'll go in and set that at 428, allow some commissions, and then a lot of times I'll trade without even a TP.
Right. Right.
Because
Yeah.
I actually have my TP in there. So yeah, that's a good point. And I've not done that here, because I have risk built in. There's a stop on every trade,
Yeah.
and again, just watching closely. Hey, what is my drawdown? Is there hedging as I'm running multiple sessions? And it kind of in the beta test phase too. To where,
Yeah.
hey, I need to kind of let the bot kind of do what it's going to do.
Yeah.
Uh, but the risk is really built into the automation, you know, and then we optimize to say, hey, historically, we've never even come close to this daily drawdown. The optimization that we did earlier, uh, where we kind of seen that $1,300 drawdown.
Yeah.
Well, I do have one. It's tomorrow day MNQ where the net profit really looks good over time, but that drawdown was over 1,000. So
Mhm.
the Globex, I got two micros, even on the 50Ks,
Yeah.
because the drawdown is very good. But because the drawdown on the day tomorrow is like up over 1,000, I've got those already loaded, ready to go, one micro.
Mhm.
So
Yeah.
again, it could kind of if it was a 150K account, I'd leave it at two micros, but I don't even want to deal with, well, to me, it's just, I don't want an account. I'm not going to optimize on a 50K where optimal drawdown is going to be over 1,000.
Yeah.
Even
Mhm.
though that may never even be a daily, but again, I'd much rather cut the size in half. So now that drawdown 650, I'm like, that's not an issue. MNQ, as volatile as it is. So for that day, because of the drawdown, even though it's got like a 5-to-1 net profit to that max drawdown, that particular configuration, that drawdown in the past 90 days is more than I want with a 50K. So then that becomes a one micro decision versus like the two with the larger accounts.
Gotcha. Okay.
So yeah, so it'll come with time, and there are some, yeah, there's been multiple times like, well, I ran into that issue with that instance setting that I told you that was one of the two things I need to kind of work through from a code perspective.
Yeah.
Well, when I turned on my daytime so that they would pick up around 5 in the morning before I'm really engaged and everything, they kind of took over the bots that were active. Well, I was already green 458, so I would then just turn those off and went to bed. So there's an example where it's like, hey, you did hit on a 50K, you're up 450. It's like, do you really even want to trade the rest of that session? And I think that's a very valid question. Very valid question. 450 when you got 4 micros and it's a larger account, that's a different story because that's really not that big of a win. But on a 50K with 2 micros, if you're averaging $400, on a night session, then can turn around and do the same thing on a day session, well, that's $900, within one 23-hour session.
Yeah, in a week's time you'd be funded. So
Yeah, yeah.
and that's the other thing is, just because like Apex saying you can get funded in a day, for me the thing is I'm trying to keep the account longer than a day. How many times have we done that, right?
Oh, exactly. And
Passive,
how many
get a
times are they
PA
going to
and
pay you,
yes,
on day one of a
right.
PA account?
Yeah. Right. Yeah. So how many times that happened and you're just sitting there dumbfounded, like, why did I do that? I'm an idiot.
Yeah,
Yeah.
yeah.
Uh-huh. Yeah.
Yeah, so it does. It's, the risk is kind of built in there, but the size, what does your data say? And you've always got to be very conservative with the data. Um, so if you look at that drawdown and you would not like that drawdown on that particular account size, then you need to probably reduce at least a contract or more. But on a 150K account legacy, with an actual 5,000 drawdown and no daily drawdown, yeah, 2 micros is wonderful, in what I'm testing right now. It works really well. At least the data says it should be. So, all right, I think we'll kind of wrap it
Uh,
up there. I hope this was of value.
all right.
Um,
Yep.
Yes. Thank you,
yeah,
Jake.
I'd love for you guys to share data or just ask questions so that we can really kind of clarify, because if I like the fact there's 4 different types of strategies, within this one here. You can't, I'm not aware of anything out there that you could actually approach it. Hey, for days that I believe it's going to trend, I can set up for a trend. When it's ranging, then my fixed TP with fixed stop loss is going to work. Hey, I really don't like all the losses that come with the risk reward. I need a little bit more of ability for room for it to move. And so kind of utilizing the pivot points from the look back, is kind of a different approach. You just may get some inverted reward to risk ratios that you don't like, because the fixed take profit optimized separate from the stop look back mode, smaller the time frame, the more balanced those ratios are. And what I mean by that, those 3, 4, 5 minute time frames, hey, I do have at least a 1-to-1, if not a greater reward to risk. But when I start getting at 9, 11, 17, 15 minutes, those are the ones that you can get some good data from optimizing, but you just be amazed your risk is 3 or 4 times your reward, you know, based on some volatility. It could really, really set it up. And those are just, again, over time, they're fine because then you got room for it to move. Today was a case in point. MNQ's stop was at the top of the range, with a TP of like 120 points, but it entered down in the bottom third of that range. Again, it's just number of candles, because it was like 5 or 6 lookbacks and price had come all the way down, in 5 or 6 candles. Well, I let that go because of assessing more of a range day, and then I was able just to add to those positions, and I was green by it, and I just let it go. Uh, Again, just let the bot do what it's going to do because it could have rolled right back over. There was still part of me thinking, hey, there's some definitely bearish sentiment that did show up in that first hour. It could be right, even though it entered short, bottom part of the range. The stop was high. I'm like, that reward to risk is completely backwards. But it worked out great, actually. I just added a couple times and I was green. That 76.80 was really the lifeline there. Rejection from VWAP, and I'm like, 76.80 is a psychological even number. Let's do it. And I was green on about 6 accounts, and I was done. So, all right, we'll wrap her up there. But I'd be loving to know how you
All right.
guys do, and especially if you got any
Okay.
questions. But
Yep.
yeah, and
That was
just
good.
it's an additional opportunity to manual trading for sure.
Yep. I agree. Thank you
All
very
right.
much.
All right.
Y'all
Thank
have a
you.
great
Have a good
weekend.
one.
Appreciate it. Okay.
Bet.